Welcome back, everyone. So in this session, we are now going to go and apply what we've talked about in the first session. So I've taken this question out of the tax workbook that is loaded on the VC portal. But what I'll do is after the session, I will upload my one with my comments onto VC Learn, and for the guys at the other campuses, I will email it to you. So what do we have to do when they ask you to calculate the VAT payable refundable? Okay, so normally a question wouldn't have a heading that tells you what it is for. So where we would have to start is we would have to scroll to the bottom of the question and first go look at what is required of us. What do we need to physically do? So the first thing here, we're just going to focus today on the VAT payable, VAT refundable. The accounting entries we're not going to focus on today. So they ask you to calculate the VAT payable or refundable for the tax period ending 30 September. Then they ask you to give brief reasons whether you include or exclude an item. Okay, so brief reasons would be it is an exempt supply, it's a zero-rated supply, input VAT is denied, it's a non-supply. That would be seen as a brief explanation. And then they tell you all VAT effects should be rounded to the nearest rand. Now, if they do not indicate what the rounding should be, you round to the nearest cent, so second decimal. If they want you to round it off to the nearest rand, they would indicate, for example, in this question like they did. And then if they bold stuff in a question or in the required, it means that it's important. They want you to do it in a specific format to get to the answers. Sometimes it is also to guide you, to help you to work out the question. They want you to clearly distinguish between what is input VAT and output VAT. So in this scenario, they said use, for example, 2 columns. You could also do it in 1 column. There's nothing wrong with it. So you need to decide what works easiest for you. So now we know we have to calculate the VAT payable, VAT refundable. So now we can go to the rest of the information. And as we go through it, you assess what type of supply am I dealing with? So, and is it input or output VAT? Okay, so let's go to the top now. So they tell you sportswear manufactures sports equipment for the local and export market. So if they tell you local and export, that means there could potentially be zero-rated supplies in that question. We are a registered vendor for VAT purposes, and the following information has been extracted from the accounting records. So they've given you 2 months worth of information for the accounting records. All amounts listed are inclusive of VAT. So there you had to already see it includes VAT. Okay, so that's first thing you need to note is yes, it has VAT in there, but they tell you where applicable. So if it's zero rated, if it exempt supply, there would not be VAT in it. Okay, then you'll see they've listed income, they've listed expenditure, and then there's certain items that have notes. Now, if there is additional information, it means that you have to go look at that additional information to determine what type of supply it is. Because sometimes what could happen is that item could be split into 2 types of supplies based on the information provided. Okay, so before we can deal with it, we need to go look at the additional information. So how I would suggest you do it is start at the top and then work your way down. And as you get to a note, then go to the additional information, go deal with it, then come back. Okay, so what we said is input or income. Which page on the workbook? Let's quickly see. It is on page 7. Estienne, did you find it? Okay, so if you want to use your workbook, it's on page 7. Okay, so now we have to go look at what's input, what's output VAT. Okay, now what we said is any income, any revenue would generally go to output. Okay, so we know this would relate to output VAT. So when we do our calculation, we can go enter this information onto our output column. But now we have to go look at what type of supply do we have. So local sales, they do not actually give you any further information. There's no additional notes, so we know this is standard rated. Okay, export sales, we know that export sales is leaving the country and that an export sale is then considered as a zero rated sale. So as you go through the question, you indicate as you go through it, stop making notes on your piece of paper, because this will help you to just go and enter it when you do the physical calculation. Then if we look at interest on overdue accounts, now you have to go back and you're like, okay, what type of supply is interest? Okay, yes, interest on overdue accounts is an exempt supply, so it is exempt. Discount received, what do you think is discount received? Out of the 3 types of supplies, do you think it's standard rated? Do you think it's zero rated? Do you think it's exempt? What type of supply do you think is discount received? Okay, so discount received is standard rated because it does not fall under your list of zero and exempt items. But if you weren't sure, then you first had to go through your list and then decide. Okay, now the last item is bad debts recovered. Now you will see we've got additional notes. So before we can decide what type of supply bad debts recovered is, we first have to go look at what type of data was it. Because based on their market, they can either have a local data or it can be a foreign data, which means it's either standard rated or zero rated. So let's page down to note number 1 and see what the additional information indicates. So we've got 2 debts which have been written off in previous tax periods. So it was written off, is recovered. Now remember, when you initially did it, when you created the invoice, you would have raised the output VAT. When it becomes a bad debt and you will no longer recover that amount, you were allowed to claim an equivalent input VAT. But then what the VAT Act says is if in the event later on that person comes back and they actually settle the debt that was outstanding, then you have to raise the output VAT again on that amount. So they tell you an amount of 1,595 Rand was recovered from Jim Daly, a local sale to a local sale. So that is standard rated. 464 was recovered from an export debtor, and that means it is zero rated. Okay, so this is standard. Just going to put here standard, and this is zero. Okay, so if you did not go read the additional information, you would have taken the full amount to standard rated 15%, and then you would have lost the marks. Okay, so let's then go fill it in on our sheet. So I've already created, I'm just going to make it a bit bigger so that all of you can see nicely on the screen. Okay, so I went and I populated the information so long. So on the first one, we said it was local sales. If I go back to the local sales, the amount was 136,800. Now, because that is inclusive of VAT, how will I work out the VAT component? What will I multiply that amount with? Okay, so let me repeat that. For the local sales, how will I calculate the VAT component? Okay, so Estienne says we multiplied with 15 over 115. That is correct. So for local sales, we take the 136,000, we multiplied with 15 over 115, and we get an amount of 17,843. Then export sales, we said is zero rated. So that means when we indicate it on our calculation, we would indicate it as a zero rated supply and we would show a zero in there. Okay. And this is the short description that they were talking about that you have to indicate, and you would receive a mark for that. Then interest on overdue accounts, we said, okay, that is an exempt supply. So that would also mean that this would be a zero because it's a financial service and an exempt supply. But if you just indicated it's an exempt supply, you would still get the mark for it. Then discount received, we said is standard rated. So we take the 3,648 Rand, we multiply it with 15 over 100, similar to what we've done with the local sales, to get to an amount of 476 Rand. Then if we go to the bad debt recovered, now we move to the additional information. When you document this in your calculation, you need to go split it between these two datas because of the fact that it's different types of supplies. You can also just indicate it as one with two amounts in brackets, but it's better just to do it separately to make sure you don't get confused. So we've got our local data, which would be 15 over 115, and then we've got our export data, which is zero rated. So you would receive a point for this, you would receive a point for the export data, which is a zero. Okay, so now we know we have covered all, based on the information, we've covered all the output VAT. So now the next step is to total all the output together to get to a total output VAT amount. Then we move on to the input VAT. We're going to follow a similar method than we did with the output VAT. So we know expenditure or purchases relates to input VAT. Okay, so then I go write down this information, but now I have to go through each and every individual item. Now let's see, purchases of raw materials, there is a note 2. So let's go see what that additional information tells me. So it says raw material at a cost and custom duty value of 50,000 was imported from Botswana, and goods with a custom value of 29,800 was imported from UK, and the import charge was 2,380 Rand. Okay, how would we deal with this importation of goods? What is the calculation we need to do to work out the VAT component based on the goods we've imported? Okay, so I'm going to repeat the question. When we import goods, how do we calculate the VAT again? You can just type your answer in the chat function, or if it's easier, you are welcome to pick up the mic. So let me just repeat the question. When I import goods, how do I calculate the VAT on that imported goods? Okay, so Alzana says we take the consideration plus 10% times 15%. Okay, so Alzana, you're on the right track. There's something you guys need to look out for first before you can give me an answer. We first need to look at what country does it come from. So remember, when we do importation, we have to look whether it's a BLNS country or not. Okay, so based on that, do we have a country that falls in the BLNS group? Yes or no? And which country would that be? Okay, so Estienne says yes, Botswana falls into that country. Okay, so that's correct. So for Botswana, we would do the calculation slightly different to what we would do for the UK. Now, when we discussed it, we said you take your custom duty value, if it's a BLNS country, so in Botswana's case, we'll multiply 15% and we take the custom duty plus any surcharge that we paid. Now, in this scenario, we only paid a custom duty value. There wasn't any additional import charges relating to that. So that means we would take that 50,000 multiplied by 15%. And then for the UK, we take the custom duty value, we add 10%, but then we also have to add the import charges to be able to work out the 15% on that. So that is what you had to see there. So if we look at the raw materials, so Botswana was only 15% on the 50,000 because of the fact that there was no additional import charges. Whereas the UK was the 29,800, so they would have allocated half a mark to that. Then the additional 10% would have been another mark and a half, and then the import charges would have been 1 mark for that, and then you would have received another mark for the 15%. So for the UK one, you would have earned 3 marks by identifying it's not one of the BLNS countries, and that the calculation is different to that of Botswana. Okay, so that is what you had to see in this additional information. Now, if we go back to the top, salaries and wages, who can tell me what type of supplies are salaries and wages? What type of supply is salaries and wages? Alzan, that's correct. It is an exempt supply. Who can tell me what type of supply is petrol? That's correct. It is zero rated. Okay, motor vehicles, repairs and maintenance. What type of supply do you guys think that is? Estienne, that's correct. It is standard rated. Okay, insurance on motor vehicles. What do you think? What do you guys think? Insurance? What type of supply would that be? Okay, so insurance on motor vehicles is also standard rated supply. So you are allowed to claim the VAT on the premiums that you pay. Okay, so standard, I'm just going to do standard. Okay, then the next one we see, we've got motor vehicle purchases. Now, as soon as you see motor vehicles, a little flag needs to go off. I need to go look out, is it a normal motor vehicle? Is it a delivery vehicle? Because input VAT is denied on normal motor vehicles, whereas for delivery vehicle, I would be able to claim the input VAT. Then you would also see they've given you a note 3, so there's additional information which tells you, they will tell you what type of motor vehicle this relates to. So let's go see what information they've given us. So they tell you the following motor vehicles were purchased by the company during the tax period. So there's 2 types of vehicles they have purchased. So the first one is the City Golf. They tell you it's second-hand from a non-vendor and it was for 40,000. Okay, so my question now is, would I be able to claim input VAT on that City Golf? Yes or no? Okay, so Estienne says no. Okay. Alzon says yes, notional input VAT. Okay, so Alzon, I'm glad you actually brought up the notional input VAT. Okay, so in this scenario, they've given you the second-hand and non-vendor information to lead you towards the notional input VAT. However, because of the type of motor vehicle it is denied whether it's normal input VAT or notional input VAT. So in this scenario, because it is a normal motor vehicle, no input VAT would be allowed. Okay, so the notional input VAT is more related to, for example, computer equipment, office equipment, where you would be allowed to claim input VAT under normal circumstances. So in this scenario, your City Golf, your input VAT would be denied. There would also be no notional input VAT. So this one is input VAT is denied. Okay. Then for the Toyota Bucky, what do you guys think? Are we allowed to claim input VAT for that? They tell you we used it to transport companies' goods. Okay, so because we use it to transport our company's goods, it is a delivery vehicle. So in this case, because it's a delivery vehicle, we can claim the input VAT. Okay, so you see how with the information you need to read carefully and you need to know the rules, because what they will do is they will try and confuse you. Okay, so in this case, the one we're not allowed to claim any input VAT, so it will be a 0. The other one we can claim the input VAT because of the fact that it's a delivery vehicle and not a normal vehicle. Okay, so let's capture the information up to here. So we've already done the purchases. So if we look at salaries and wages, we said is an exempt supply. So that would be a 0. We said petrol is a 0 rated supply. So that would also be a 0. We said motor vehicle repairs and maintenance was standard rated. So you take the 3,534 multiplied with 15 over 115 to get to 461 Rand. The insurance is also standard rated, which is 260. And then we add the motor vehicle purchases. Now here you have to distinguish between the 2 cars. So the one is input VAT would be denied, the City Golf, and the other one is Toyota Hilux. Okay. So because the City Golf is a motor car as defined, input VAT is denied. So whether it's normal input VAT or notional input VAT, it doesn't matter. You will not be allowed to claim it. Okay, so let's go back to the question now. So now we've done motor vehicle purchases. Now the next item is a motor vehicle depreciation. Will we be able to claim VAT on motor vehicle depreciation? What do you guys think? Okay, so Estienne thinks it's standard. Do anyone else have any other comments they would like to add, or Do you have a different view to Estienne? So let me repeat the question. Motor vehicle depreciation. What type of supply is it? Okay, Christine thinks it's zero rated. Okay, Alzan said, isn't depreciation only accounting entry? Okay, Alzan, that's exactly what I was waiting to hear. Yes. So remember, motor vehicle depreciation is an accounting entry. We only raise VAT on supplies of goods and services. Now, depreciation is not a supply of a good or a service, so there wouldn't be any input VAT to claim on it. So in this scenario, this is deemed a non-supply because of the fact that it's an accounting entry. So there would be no VAT to actually claim on that amount. Where you would have claimed the VAT if you were allowed was when you purchased the good. You would have claimed the input VAT. Okay. So in this case, depreciation is a non-supply and therefore there will be no VAT implication on it. Okay, printing and stationery, what type of supply is that? Okay, that's correct. It's standard rated, discount allowed on local sales. What type of supply do you think that is? Okay, so let me repeat that. Discount allowed on local sales. What type of supply do you think that is? Okay, let's start with the easy one. Local sales. What supply is it normally? Okay, so let me repeat this. If I made a local sale normally, what type of supply would it be? Okay, sales on says it's standard rated. Now, if I give discount on that supply, that would also be the same type of supply than the original sale. So for this reason, that discount allowed is also standard rated. Okay, so if it was on export sales, then it would have been zero rated. So any discount that we receive or that we allow would be exactly at the same rate as the original sale or purchase. Okay, so that is something to remember in a question. Now we get to the bad debts written off. Now, bad debts written off, we need to go look at what type of data was it. So is it a local data? Is it an export data? Because that would influence whether it's a standard rated or zero rated supply. So let's go look at point number 4 to see what type of information they provide to us. So they tell us there were 2 bad debts were written off. So the first one is 2,850 to a local debtor. Okay, so that is standard rated. And then 1,783 to an export sales debtor. Okay, so that means the first one is standard rated supply and the second one is a zero rated supply. Okay, so similar to what we've done with the purchases, with the bad debts recovered earlier, you will need to go distinguish in your question between the two. Show them separately. Okay, so let's record the transactions up to bad debts recovered. So we stopped at motor vehicle purchases last. So we said motor vehicle depreciation is a non-supply. So it's not a supply because of the fact that it's a counting transaction. Printing and stationery, we said, is standard rated, so it's 15% or 15 over 115 of the amount. Discount allowed, exactly the same scenario. Then the bad debts. Now you have to go split it between your local debtor as well as your foreign debtors or your export debtors. So we take the local debtor, then it is 15 over 115 to get you 372. But then your export debtors is 0 rated, which makes this a 0. And then you would receive a mark for each of this. Okay, so it's very important to distinguish between the two to actually get the marks. Then if we move on, we see interest on overdraft. Now, interest on overdraft is an exempt supply, similar to any interest we receive. So this would be exempt. Bank charges. What type of supply is a bank charge again? Yes, that's correct. So bank charges is standard rated. Do not show me in a test that it is exempt. It is not exempt. It is a service that is provided. Okay, entertainment and subsistence. What do you think we need to go look out for when we see entertainment and subsistence? Is there anything we need to specifically go look for? What do you guys think? Okay, if you see the word entertainment, a little flag needs to go off. Okay, generally entertainment is denied, but now we have to go read the additional information at point 5 to go look at who was the entertainment for. Okay, and then Estian says we also need to look at the subscriptions, whether it would be denied or not. Okay, so let's quickly look at what information did they give us. So the first one is staff tea and coffee. Okay, so staff tea and coffee, is that an exempt supply? Is that a standard rated supply? Is it input denied? Is it 0 rated? What is staff tea and coffee? What did we say? Okay, that's correct. So input that is denied for staff entertainment. Okay. In club subscriptions for the managing director's membership in a local golf club. Okay. Is a club subscription, will we be able to claim the input VAT or will it be denied? Okay, so in this scenario, because it relates to golf and not to a professional membership, your input VAT will be denied. If they told you it was for a professional membership for work, then you would have been able to claim it. Okay, let's look at the last one. Hotel cost incurred for the managing director while away on business in East London. What do you guys think? Will that be allowed or will that be denied? So hotel cost. Do you think that is viewed as entertainment expenditure that is denied, or would that be seen as a valid business expense? Okay, so Christine, yes, it would be allowed. So this would be a standard rated one because of the fact that it is for business purposes and it is for accommodation that is required for work purposes. Okay, so in this case, that would be allowed. So let's go to our Excel and let's quickly update. So bank overdraft interest, we set as the exempt supply, so that is 0. Bank charges is standard rated, it's 15% of the amount. Let me just see what the amount was, just to add the calculation. So it's 432. Okay, then the entertainment and subsistence. Here you would have to go split it out between the 3 items that they've discussed, because of the fact that staff tea and coffee is denied because of the fact that it's an entertainment expense, whereas the golf club is denied because of the fact that it's a club subscription. And then the hotel cost is allowed as standard rated because of the fact that it is for work. So if we go back, we still have 2 items left over. It's the rental of the premises and the rental of our computers. Now, both of those supplies are standard rated because it is for business purposes and there's nothing that disallows it. So those would also be 15% over 115. Now, once we've done all the input VATs, now what we do is we add that entire column to get to a total of 686 Rand. Okay, now based on the information here, will we have a refund or will we have to pay VAT over to SARS based on the input and output VAT figures on the screen? Just going to make it a little bit smaller. Okay, so left is output VAT, right is input VAT. So based on that information, will we have a refund or will we have to pay VAT to SARS? How do we know? Okay, so I'm going to repeat this question. How do I know if it's a refund or if I have to pay it? Okay, so I see people say it's a refund. Okay, so Estienne says we do output VAT less input VAT. Yes, so that's the calculation. Now we know it's an input because of the fact, we know it's a refund because of the fact that the input VAT is bigger than the output VAT, which will result in a negative amount. So if you take the input VAT and which is more than the output VAT, you will get a negative figure. Okay, and that's how it is refundable. So I would actually write it, let me just change this. So I would start with the output VAT and I would deduct the input VAT, and then you would get to a negative figure. And that is how you know it's a refund. So here you can see if you're unsure in the beginning whether it's payable or refundable, you can write it like this. And then when you get to the final figure, if you run out of time, we can still allocate a mark because you have indicated clearly when it will be payable, when it will be refundable. Okay, and that is how you do a basic VAT payable, VAT refundable calculation. So you can see from this question that there's a lot of items in here that if you can do the VAT basics, you can actually pass this question really well and make up the marks that you need for a different area where you might struggle. Okay, so do you guys have any questions on what we have done in this question today? Okay, will you be able to do this now when you get a question like this in a test or an exam or in an assignment? You can just indicate with emojis whether you'll be able to do it. Okay, Salzan says she's fine. Mantikana as well. And Estian. Okay,